And now the Chinese capital market start to show the sign of recovery. Really, a whole backlog of all the policy announced since March last year. Give or take, probably about 38 major policy, including one of like today's announcement by PBOC of cutting mortgage rates, cutting the down payments to support real estate sectors. All of that didn't get much market attention. While investor is recovering their sentiments or confidence towards investing in this asset class. But almost 12 to 16, 18 months later, now investors start realizing the rotation to reward the fundamentals to start.
Is this a house built of straw? Because is it being built on debt upon debt? You're encouraging people to borrow more money at lower interest rates. This is something that President Xi and his advisors have been loath to do, to pile more debt on the state, on the municipalities, on the individuals, on the corporations in order to get out of this consumer malaise as well. Are we now seeing a reversal of that policy or that stance, and actually they're saying increased debt as the way to get through this?
For China's economy to substantially rebound from here, credit need to pick up. Period. End. Corporates, household at this level is very low.
But you need appetite for that credit as well. And one thing that some of the greatest minds have been pointing at, saying, look, the Chinese know that they're seeing a balance sheet recession at the moment, whereas consumers have the money potentially, they just don't want to borrow more money as well. Regardless of the incentives to borrow more money, they don't want to, because they understand that they don't have a social safety net, so hence they have to build up their savings if indeed they're not going to make money from the property sector.
Property sector will not be the wealth creation going forward. I made it that very, very clear. That's my view. Okay. I think you're absolutely right. You need to have a catalyst for the corporate to say, there you go, I'm going to start to borrow, start to expand my line of a business. But they haven't really started that. I agree with you on that. Credit pickup in February, March show a sign of uptick, not at the level they would like to desire. Today's policy is one to provide social stability. The sold and finished home, finish it, okay? And then the government step in to say, I will put a floor into the space.
So can we talk about a timeline here? Because the property woes have continued quarter after quarter after quarter. So I think the market has been hoping for some sort of prop to come in, but simply just hasn't appeared. And if we look at the numbers Goldman Sachs produced this week, they're saying saleable housing inventory was valued at roughly $1.87 trillion at the end of last year. Saying, and because some of the construction had not been finished, a different metric here would require about 5 trillion yuan of capital investment. These are huge numbers. So as we talk about measures today to lower the bar on mortgages and to get local governments in to buy up some of the housing stock, how long is it going to take to turn this around? It feels like it's still a long journey here.
Until the retail investors or the households start to stepping in, these kind of measures really just a symbolic of psychologically giving the investors to say there's a floor.
Does it happen this year, do you think? Do you think we see a turnaround in 2024?
There's probably 2 or 3 major milestones need to happen. For instance, those real estate developer that were or still is in trouble need to declare bankruptcy. It's the open story, they are bankrupt. They're just winning the time.
The Chinese authorities said that this year. They said properties that need to go bust or that must go bust, need to go bust, should go bust.
This year,
but we
I
haven't
think,
seen it, have we, necessarily?
Exactly. This year, they should make that happen.
Through the courts?
I think the company themselves to declare such action to make it happen. Because some of the companies really just winning the time to finish the unfinished projects, which they should be done by this year, given the timeline required. If that is the case, all these relaxation, they should do massive more relaxation on the people who live in the tier 1, tier 2 city that are not eligible to buy the house because of certain identity systems in China. If they remove that more in a massive way, that's actually the people who hold cash, who can buy a house, are not eligible to buy.
So to me, there's another consequence today on what we're hearing, and this is on the banks. So the banks have had a fairly large exposure to the property market and, of course, to the consumer. If we get some movement, presumably that does something for volumes on the loan side, but equally, the banks could be sitting on even lower margin business and potentially on some delinquent exposures here. How do we think about what's still coming from the banking sector?
Banking sector, real estate has been consolidating for nearly 2 years. I think real estate sector has been, a lot of the pricing downwards has been pricing into the market today. That's one. Government stepping in definitely help. Government steps to buy definitely help the stocks. The third most important thing is really the real estate sector got to be consolidated itself. Price will continue to fall, if you ask me. For the most major 70 cities they track in the index, price continue to fall, particularly fall in April. The other things could help the bank a bit is Sam mentioned this, the ultra long dated bond issuance started this week by Chinese government, the ultra long dated bond. The uptake on that was massive. Okay, when this issue, a lot of people take it up, all the quota get issued, which is a great sign that bank and also other investors still looking for yielding alike instruments that's away from real estate market.